Greetings, mammalians. Welcome to Wall Street Wildlife.
The investing podcast that'll help you better understand how to make money in the stock market.
I'm Christoph Monkey Pikarski.
And I am Luke the Badger Hallard.
Badger, welcome to 2024 and welcome to the land of the free and the home of the brave. Glad you made it across the pond yet again.
You should see the precarious setup in the kitchen of my Airbnb where I've got like cameras and mics and lights balanced. But I was just trying to get like a view of the snow. There's some Park City snow right behind me, which I haven't got to yet because my baggage got delayed by Delta, the airline of the free. So I got it last night at 1 a.m. So I am going to ski
Right,
today.
the trials and tribulations of a youthful retired man. And for listeners just finding us on the YouTube, this is serious. You look at this badger in front of you. You marvel at his handsomeness. You're stunned by his debonair nature. But what's hard to see is that because of his investment savvy, he has been able to, hard work for a long time and investment savvy, and he got himself retired at a young age, and now he's doing nothing but loitering all day in the bases of snow-capped mountains and skiing all day and sip. What do? Sip brandy by the fireplace by night?
I got some tequila yesterday. It turns out, I didn't realize, we bought like the A-list of, I've got like the George Clooney tequila, and the other guy, Ryan Reynolds, is it?
Yeah.
Yeah, one of them.
Yeah, so what I'm saying is listen to us in terms of the investment stuff we talk about, because you too can be waking up at the bottom of a skiing resort with tequila and shit at 8 in the morning if you play your cards right.
Yeah, this actually reminds me of a conversation I've not had yet with my niece, but I'm debating it with my brother. And I'll sort of say this in confidence with our listeners, because my brother and I are debating, like, how are we going to have this conversation with his daughter? I've been investing for her like $1,000 a year as a birthday present. It's been her birthday recently. And so we were chatting today because I've just bought her latest kind of birthday present stock, and I buy her $1,000 in like a story company. This year I bought Rocket Lab, one of my favorites, for all my nieces and nephews. That's Katrina and my's Christmas present and birthday present gift to the kids. But the conversation that we want to have with my brother's daughter at some point is, like, you've built a substantial portfolio now, and she legally takes ownership of it. She can make decisions as of next year, and then she can cash it out and do what she wants from like 2 years after that. So we're kind of fingers crossed that she's going to run the portfolio for a lifetime. Like, she could retire younger than I did if she kind of continues her current trajectory. But at the same time, we're kind of a little concerned she might blow it on vacations. I'm hoping it turns into at least a university education and maybe a deposit on a house.
That's one, mighty generous and wise of you, Badger. Two, is she a subscriber?
She's not. No, I do not believe so. Yeah. So I can have this conversation in confidence with our little intimate group of over 100 subscribers. Yes, we got there. We broke the triple digits. Thank you very much for subscribing.
That's right. That's the hardest part, right? Going from zero, where nobody knows about our antics, to now we have over 100 faithful fans and listeners. The next 900 are going to be a piece of cake, and then before we know it, we'll be running our own ETF.
There we go. And one of my ski buddies is a Instagram influencer. She's got a pretty substantial following, so she is like the master of Instagram. So I'm hoping to learn some Instagram game from her over the next couple of weeks.
Yeah, so time for you to get schooled and get us those subscribers. Anyone listen to this, press, smash, whatever the kids say about the like buttons, wherever they are. Maybe they're below or maybe they're above. Who knows? So time for the King of the Jungle updates. Let me share my screen.
While you're popping that up, my God, my king crown is slipping off my head. I fear that graph where you are slowly declining into the abyss has turned precipitously upwards, and now I'm in danger of losing the lead. I think.
That is correct. That is correct. Was there any ever doubt, Badger?
Yes, substantial good cause for doubt.
So I did a lot of stuff. I did a lot relatively speaking. So let me update y'all on what you are looking at. First of all, I trimmed some shares in Coherus. After they received FDA approval, the stock went from its lows of about 150 a share to 370. So that was close to 100 whatever percent gains. My portfolio was over 50% in Coherus, and from strict portfolio allocation purposes, I trimmed because 50% is just way too much, even though this is a long term project and we're continuing to add capital over time. So, my goal is not necessarily to trim if there's a lot of room left to run, but let the additional capital kind of smooth things out. However, in this situation, I think it was close to 60%. And I have lots of room to put that money elsewhere. I thought trimming a little bit was the right move. So
Look at Monkey. He's betrayed his principles of just going wild with his bananas, and you're exercising some portfolio discipline. It's incredible.
so that's one move I made. I also sometimes in investing, Badger, you know that the most obvious choices are right before your eyes. And I'm a big fan of Rocket Lab. It was a company in my own portfolio before I mostly sold everything.
Right.
But as you know, in our seven investing powwow, we talked about Rocket Lab extensively. You have it in your portfolio. And so I'm not going to just sit there and and just let a good idea and not take advantage of a good idea. But the way I did it is differently. As you know, I am what I think of. I'm adding to my repertoire of investing skills by also looking short term as well as long term. So I'm trying to do both. And I looked at the Rocket Lab chart during our seven investing call. I did my analysis and I saw a very, very good, what the technical people say is very good setup. Where what essentially, I'm not going to go on a long tangent about this, but it we know this actually, Badger, from investing that winners win and losers tend to lose. And the same kind of thing happens in shorter time frames when stocks with a lot of good momentum keep going up and stocks with bad momentum keep going down. So different games, different you do need different mentalities, but in general the two layers kind of work the same way. And Rocket Lab's chart right now is filled with a lot of good momentum. And the stock market, as you know, has been on quite a roll the last past month. And so I looked at the Rocket Lab chart and I saw lots of goodness. So I decided to go really short term and bought some February calls. So I'm kind of hoping for higher risk, higher return kind of scenario. And my downside is quite limited to the $42 that I paid for the option.
Great.
So
Okay. So you're if we do a quick callback to episode 7, I think, where we watched Dumb Money, we talked about theta being the thing that can punish you if you buy really short dated options. So you obviously understand that, and you've done this in full knowledge that you might get like raped by theta over the next month or so.
well, that's right, except I'm not going to let that happen. So the reason I'm not going to let that happen is the theta decay starts to kick in about 3 weeks starts to really accelerate 3 weeks before the deadline. My option is for February 16th. And so that gives me another couple of weeks to see if the momentum that I was seeing with Rocket Lab plays out or not. And so before the theta kicks in, I will have had my answer and I'll know whether I need to sell the option and get a more long dated one, which would technically be called rolling it, or whether the momentum kicked in as I think probabilistically will happen, and then I'll profit from that. But yes,
Great.
but you're right to alert listeners to the fact that in choosing between the Mays and the Februarys, I went with the much higher risk and a shorter time frame with which to be right
Right.
because of the theta kicking in. So that was dicey. That was something I was really thinking through.
And actually, this is a great opportunity just to kind of draw the parallel between both of our strategies. Like I just bought the shares, and I can hold those until the day, for decades, hopefully. And one day maybe the company has a valuation to rival that of SpaceX's, and I don't need to do anything. I don't need to worry about what happens in the short term. You have to much more actively manage your position built with options, so it's more complex. But the reward for that is you potentially have a higher upside. You're bearing more risk because your investment could literally go to zero if your option price isn't met. But if you manage it smartly, then potentially, your gains could outstrip those of mine, where I've just literally just bought the shares.
Yeah, that's right. And mind you, I'm doing both. I
Mm.
own shares. For example, Coherus, I own both shares and options. But yes, what I'm
Yeah.
doing is, I would say, not for beginners, or if you are a beginner listening to this, at maximum buy one contract. So for example, the Rocket Lab contract I bought cost me $42. So
Yeah.
that's not, I think, relatively speaking, that much money. And I don't plan on letting it go to zero once I have my answer about the momentum. I'll sell
Yeah.
it before it goes to zero. But
Right.
yes, Badger, my strategy, because it has higher scenarios, also requires much more active management, so to speak.
Yeah. Great. Like I just want to double down on your risk warning though. Like what you've done is relatively low risk, albeit you do have the chance of your entire investment going to zero. That is the risk of buying options. It could be much worse if you sell options. So, like before you even stick a pinky toe in this world of derivatives, like do some proper reading and go down the rabbit hole a little bit. Understand the risk you're bearing. Um, what might look like a relatively safe, low volatility play might kind of catch you unawares if you're not an experienced investor like Christoph.
Badgers is right. Options, you need an understanding of fundamental understanding of how they work, in and a lot of things could go wrong. So make sure you know what you're getting into, and ask if you don't. To follow up, I also, you'll be you'll be devastated to hear, Badger, but I also added a few shares of EOS. I did this yesterday when they fell under $1.
You just can't help yourself, can you? It's like
Uh,
an addiction.
it's
You're
a
addicted to
little.
the pain. You're addicted to the pain.
Yeah, we shall see. We shall see. But the long-term story remains intact, and I like the progress they're making on the manufacturing line. And sometimes, there is a big gap between the value that is perceived and what will actually be actualized in the future. So I did this from the principal standpoint of cost dollar averaging down, which is not always great when the company is in trouble. But I don't think the company itself is in trouble. The trouble is around its financing, which may or may not work out in investors' favor. And I didn't add too much either, by the way. But just a little dollar cost averaging down. And then the last thing I'll say is I added the beginnings of a tiny basket of Bitcoin miners. The two companies I went with are Bitfarm and Cipher, CIFR and BITF. And for now, they are very small opening Bitcoin mining positions for me, like as in a basket, because I don't
Right.
quite have full confidence in which one is a clear winner. I don't think there is just one that is head and shoulders above the rest. So I'm kind of accumulating a few of them.
And okay, I like that you shared some of this. And if you want to know more about Christoph due diligence and his thinking around Bitcoin, go check out seveninvesting.com. If you go subscribe today, and if you use promo code wildlife, you can get a handsome discount on membership. And right now, there's some good DD up there, very recent from Christoph, on some of his thinking around Bitcoin and Bitcoin miners. Worth checking out.
It's quite a world out there. Badger, what have you done with your portfolio?
Yes, well, incredibly complicated. I've done nothing as a long-term investor. I added $100 because it was like the first of the month. In fact, that's now like a automated credit. I didn't even think about that, and I thought about doing some things, but nah, I haven't done a thing yet. I haven't touched it. So I've still got my 7 positions. Probably 5 of those are my favourite stocks. I've got 2 wild cards in there, one of which isn't doing very well. BYD is one of my wild cards. But some interesting BYD news. So if you caught last week's predictions episode, I believe I predicted in Tesla versus BYD that BYD would do greater revenues in 2024. Well, I just saw a news item this morning that in BYD's latest results, they have now actually outsold Tesla on a volumes basis, like the number of cars. But it's a bit fraudulent, really, because not fraudulent. It's a bit of a strange thing to point out, though, because like half of the cars BYD sell are like regular gas cars. They're not fully electric, so it's not. I still prefer Tesla by a mile. But in terms of that prediction, I'm pretty confident that's going to come true by the end of 2024. Go check out our other predictions in episode 8. We had a lot of fun.
Well, you mean your prediction that I'm sorry, what's the ticker again?
BYD, build your dreams.
Right, BYD. Your prediction is merely that they will have more revenue than Tesla, correct?
Correct. By the end of this year.
Okay, and for just for the record, that in investing terms may or may not mean anything. So simply because you sell more of something does not mean you are a better business if, for example, your margins, the amount of money you keep, are minimal. Or you could actually be selling stuff at a loss. So,
Yeah, if you want to, as they say, if you want to set up a business selling like dollar bills for 50 cents, you're going to become the biggest company in the world pretty quickly.
right,
Yeah.
right. So, so you're not trying to pull a fast one on us with that prediction, right?
No. But I mean, a well-run. I'm not certain that BYD is a well-run company yet, but a well-run company will eventually achieve efficiency, start converting more of that revenue into operational profit, and then later into net income as they optimize more and more along kind of the cash journey of a company, the maturity journey.
Okay.
Hey, who's this fella? Who you got here?
So this is my this is your effigy doll. This is
Yeah, you're sticking pins in it.
yeah. If you all of a sudden feel pinpricks, I mean, you feel jumpy. I got me my own badger because, for better or worse, I think you're good for me. You're I think investing works better in general when we double check and triple check our assumptions. And it's very hard, especially when you have high conviction in something and you can't see anything beyond your own views. And so I got me this little fella to anytime I'm thinking of making the trade that's going to make me a whole lot of money. I said, what would Badger? What would Badger say? And so,
How specifically would he rip me apart for this particular thing I'm about to do?
So, so in that spirit, I thought we would share our. It's the new year, right? And I take seriously the turning of the calendar as an opportunity to really examine my own habits and to ask myself, what do I want to do differently? What do I want to do better? What do I want to do less of? And so I know some people, they kind of, I don't know, I guess some people don't pay attention to that stuff at all. Some people make resolutions, which I think most of the time fail because it's like for a week you have a whole bunch of like motivational willpower. You see people go to the gym on the first, for the first week and then never again. It's sad. Actually, that stuff makes me sad. Um, but the way I approach this time of year is to really thoughtfully do the reflective work and not think in terms of willpower, but think in terms of ways of being and then the habits that could support those ways of being, and then it kind of sticks longer, and for me it changes a lot. So I wrote down, I think we're going to share what, three or four resolutions that we're
Yeah,
going
these are
into the year with.
investing resolutions, right? You're not going to tell
Yeah,
me
that's
about.
right. That's
Yeah,
right.
yeah.
Well, mine are general, but I want to I want to think through how they're going to translate into the investing
Great.
world.
I'm just being clear because I don't want you forcing me back in the cold showers again for 2024. That's behind me.
That's not so much a resolution as just pure, pure torture.
Yeah. We got the effigy now. You don't need the cold baths.
Yeah,
Yeah,
that's
yeah,
right.
yeah.
Uh, so, Badger, what's your first resolution?
Actually, before I jump into mine, I might tell you about a resolution I sort of made mid-year last year and how I did against that. And I'm hoping that's a sign of like success for my new resolutions for this year. So you reminded me very wisely as part of the No Limit podcast, maybe Q1, Q2, 2023, that I had a bunch of stocks flagged as worry stocks in my investment portfolio. And you basically said, like, shit or get off the pot, Luke. Like, decide, are you going to own these things or not? And so I did. And I had a successful clear out of my worry stocks. And now that's part of my process. So I did that again just a month ago. I cleared out a bunch of detritus, to be honest, stuff that I'd kind of accumulated and no longer wanted to own, either potentially broken thesis or in some cases just like in the too hard pile, like not something I want to stress out about. So I could focus on my high conviction positions. So that was a 2023 win for the first of my 2024 resolutions. I would like to be more concentrated in my main portfolio. Nowhere near as concentrated as you are currently in your portfolio, um, but more concentrated for me. So maybe let me just share some numbers and then we can see how I did at the end of this year. So today I am 73% of my invested assets are in my top 10. So about three quarters of my money is in my top 10 positions, one of which is cash. That's my biggest position right now. And 90% of my assets are in my top 20. I would like to get that 90% into my top 15, which is like a step towards being more concentrated. Like long term, maybe 90% into my top 10, but that feels a bit dramatic for 1 year. But I'm going to navigate towards that. So that's my plan for 2024.
Ooh, that's interesting. That is quite similar to one of my resolutions. I realized that in 2023, I took on too much stuff. I mean, I was really doing. I feel like I'm a passionate liver and lover of life, and I get excited by things. I'm reading all the time. I'm trying to learn stuff, and unfortunately, there's only so many hours in the day. And toward the end of the year, I felt like I was overwhelmed by the nonstop parade of, well, now I have to do this and then I have to do that and that, and after a while it's exhausting. So I want to do fewer things but do them more deeply, which I think is quite similar to what you're saying about your portfolio. There's a lot of merit in knowing the stuff you know extremely well and not getting distracted by all the shiny toys, right? Because you don't need to be in investing, you don't need to be right about everything. The stuff you do want to be right about the stuff you know. Well, now that comes with a caveat because in obviously you know what I'm about to say in 2023 I studied one company more than any other. I knew it inside and out and that ended up to now being uh, a terrible investing mistake. And so it's not that yeah, it's not necessarily that depth is the answer, but I think with the way you were talking about it is right. You want to have a balance between not too little and not too much.
Yeah. And it's like in portfolio terms, I was saying, just like be invested in my best ideas, but yours is more almost in like life terms. And the same analogy exists. Like if you want to be effective, you should be doubling down on the stuff that you're best at and the stuff that's most important to you. If you get distracted, let's think about like Shopify's announcement earlier this year or last year, 2023, and Toby Lutke, Shopify, like the Canadian e-commerce giant. Toby Lutke described that they got distracted with side missions and they were not focused on like their main mission, which was making commerce easier for merchants. So they got rid of their delivery capability, logistics, and a bunch of other stuff, and they just kind of focused on doing the most important thing well, and hopefully that pays some dividends in the long term. But you could do that as a person. Is there a particular thing that you've chosen to prioritize for this year?
Uh, well, yes. So let me talk about my second resolution. And this one is the big umbrella. I need to go back to slowing down, just slowing down the pace of my life. And one of the ways I'm doing this is by returning to the core of my Zen practice, which is literally involves every morning sitting in silence for half an hour and doing nothing and being teaching my body literally how to just do nothing for half an hour with no goal, with no ulterior motive. And that carries through. I've been doing that for 15 years now, but in the last year, when there were longer gaps, I could tell that I was getting more, yeah, distracted and I was going faster and I wasn't paying attention to what was in front of me as deeply and clearly as I know how to. And the translation for me in terms of investing and portfolio management is as I'm adding the short term trading repertoire to my skill set, I know that world is full of crazy maniacs that think more is more and adding more indicators and more lines and crazy patterns is like it's this world full of frenzied yeah, like frenzy and that leads to bad decisions. The correct way of doing all investing things, whether it's short term or long term, is really slowing down, simplifying as much as possible, knowing what you're seeing and not reacting to stuff. And that's, by the way, Badger, I'll tell you, that is counterintuitive to most of the stuff you hear, especially from the short term world. Like it takes, I think, somebody with a lot of discipline and experience to know you don't have to be crazy to do short term. I mean, crazy. It does. The short term stuff does not have to be frantic, which is counterintuitive.
Yeah, okay, great. That's good. That is good to hear because I thought it was. And like patience and like having a plan is really the foundation of being a long term investor. So it's good to hear that that's also like a valuable skill set as a short term investor.
Yeah. In fact, I'll add one more thing. If to that point, as far as I could tell, both long term investors, which I'll call game one, and short term traders, which I would call game two, most of the time, if they're good at what they do, they're doing nothing.
Right.
They are looking for reasons not to do something, and they only take action when what's in front of them is extraordinarily good. So in the long-term sense, it's like, an obvious thesis that you truly believe in and proper execution. In the short-term stuff, it's uh, you could call it a technical setup over many periods that is like beyond a shadow of the doubt, and in the simplest forms it's like screaming, this is go time.
Right. It's good. Yeah, that's great. And if you're really a newer investor, it's it's so surprising that this is like an essential truth of being an investor. Like the less you do, generally, the better you are. That's not to say that you can be lazy and do nothing, but as a long-term investor, your job is to study the company, read the earnings reports, listen to the investor calls, do a bit of ancillary research, and then validate that your position is correct. And then hopefully, the thesis isn't broken, and my action is nothing. Like I'm going to sit on it for another 10 years. I'm going to keep checking along the journey, but I'm not going to do anything. And I guess what I'm hearing from you is that it's very similar as a short-term investor.
Yeah, if done skillfully. But yeah, from this resolution, slowing down is key. Is absolutely key. What's
Yeah.
your second resolution?
Not wildly dissimilar. So I want to be more diligent about my cash strategy, definitely avoiding like FOMO. And I put off, when I retired uh, a couple of years ago, I wanted to start building a bit of an income portfolio. Like I've been growth guy for decades, and it would have been the wrong time to do that because, like a lot of the income investments I was looking at were just like very expensive historically. Like the whole stock market was pretty overcooked at that point. So I've been waiting for a better point to start making that pivot. And I think it's probably going to be 2024 where I can start transitioning a bit more of my sort of percentage assets from growth into income just to get a bit more balanced.
I think we should bookmark that topic and explain it in more depth in a future episode, because any
Mm,
beginner coming to our show might not understand intuitively what growth versus income means, because I think we take it for granted, but it's
right.
not an obvious distinction.
Yeah. And in some ways, it's kind of a false dichotomy. But yeah, let's
Mhm.
explore that in a
Yeah.
future Owl's Nest segment.
Okay. So, a third resolution of mine, Badger, from the life on the life plane, is less screen time.
Mm,
And this fits in neatly with the other two, because I could tell from the way my students are in my classroom at the University of Texas that the level of addiction to constantly needing to check things is higher than it's ever been, but the consequences of all of that are obvious, and they're sad. They're quite worrying, actually. A lot of anxiety, a lot of depression, and a lot of inability to sit still and just be, and actually even talk to other humans, because the screens have taken over. So I think for investing, to me, that translates as I want to be much more deliberate about when I am doing my investing. There's going to be a block of time. This is my investing research. This is my investing. This is a deliberate time when I'm working on that, and when I am not, I am not. I'm doing other things. You and I think, are similar in that we love the outdoors life. We're athletes, right? We do a lot of running. I mean, that is essential, but I just noticed it's easy for the screens to just continue to spread their tentacles into the day from morning till night, and so I'm going to be less available on screens. And I think in investing terms, Badger, I hope that translates clearly into those other principles. I'm going to do less, I'm going to go slower, and therefore the stuff that I do and the trades that I make will be that much more focused, deliberate, and less not chaotic, but maybe reactive.
Great, very good. I'd love to have that as a resolution. It terrifies me. Like I'm
Hmm.
kind of willingly addicted to technology. Um, yeah, during the pandemic, I realized I get like RSI in my hand because it was literally like gripping my phone for 20 hours a day. And I looked at my screen time statistics, and it was like frankly shocking. Um, yeah, I'd love to do that, but I'm so down the rabbit hole with gadgets and technology. It still feels like it's such an essential part of who I am.
Hmm.
I wouldn't be me anymore if I didn't have like some sort of data feed pinging me every couple of seconds with some essential information.
Well, you might be tuning into our show for investing wisdom, but sometimes you'll get a little life, a little life
Mm.
secret sauce every once in a while. I have this side philosophy habit that I actually write with a with a professor of religious studies, something called fire philosophy, about Zen and Nietzsche and stuff. But I take the way of living and think about how to live seriously. And I think the problem, Badger, isn't necessarily technology itself, or that more is necessarily wrong, or that less is better. But the key indicator is when you stop and reflect about your own well being, you could ask yourself, are you constantly anxious or are you at ease? And there is a way to be at ease in the midst of technology, or you could be anxious in the middle of solitary woods. So I'm not saying, by the way, that you're one or the other, but as you and I talk about a lot, it's not the thing itself; it's the process, right? And we immediately get biofeedback. So some investors, I'll say it this way: there are some investors I know that they do feel like they're overstimulated, and when I listen to them or I kind of think about their process, it doesn't feel healthy to me. Like I know this is going to be an unpopular opinion, but for example, Warren Buffett, obviously legendary and always in the canon of best investors of all time. But by his own admission, in order to do that, he sacrificed everything else. His family life was miserable. Because he chose not to, because he was doing stocks nonstop from morning till night, and you can't have deep relationships if that's what you're choosing. But he knew this. So I'm all I'm saying is gauge not by the hours of, say, technology use or how many hours you're devoting to investing, but on how it makes you feel.
Okay, all right. Let me take a few weeks to process that, and I'll try and give you a more thoughtful response. Let me put us out of the rabbit hole. Yeah, yeah. Let me share my third resolution. I feel this is a bit crap, really, because yours have all been like emotional and quite interesting and deep, and mine are all these like surface level mechanical things. And this is another one. So I used to do a bit of venture capital investment, like just like I won friends and family round, which went very well with a company that was acquired by Snapchat. So that was fantastic. Um, and a bunch of kind of crowdfunding investments, like smaller deal sizes. So I'm not really getting like any kind of formal role in the organisations. I'd like to get more into that world, I think. Um, and so that's my plan for this year. Try to
Mm.
get my foot back into VC in a bit of a bigger way.
Can you share with our listeners how? I mean, to you, maybe it sounds obvious, but you have some capital and you want to venture with it. Like, what door do you go through? Like, whose number do you call?
Like this comes with like massive risk warnings for lots and lots of reasons, and it's definitely not for the faint-hearted investor. Like the biggest, so I'm almost like reticent to say too much about it because I don't want to lead people into uh, a world which is highly illiquid, and that's the biggest challenge. like you make an investment. It's like, if I buy my shares in Rocket Lab, if I want to sell them tomorrow because I changed my mind, it's dead easy. There's a market. I can just go and sell my shares, and maybe I only get back a fraction of what I paid, but there is a market. I can sell them. If you buy a unlisted company, like for example, big enormous company like SpaceX, or a tiny little company like the lingerie company I have a small stake in, it's illiquid. You can't, unless there's a secondary market, you can't sell that stock. And if the company goes to zero, like your capital goes to zero with it. You have no control or influence unless you have a board seat, and even then you might get outvoted. So this is among the highest risk of investment categories you could venture into, but the returns can be fantastic. Yeah, I don't.
Yeah, there's
You know,
the ratio of right winners and losers is like, I don't know, it's like 1 to 10, I believe. Like 1 out of 10 will succeed, the other die for one reason or another.
yeah, I think that's probably fair. And I don't know what the stats are for the UK startup scene. Probably worse than that, to be honest. I've been a little bit lucky, I think I've taken like five crowdfunding positions. One exited handsomely, the guys that got acquired. One exited with we got about 75% of our money back. So at least we got something back. The company, they very poor execution. Unfortunately, they just didn't go well. We're lucky to see any money back at all. And then two went bankrupt, went to zero, which is pretty standard. And then the other two are both looking fantastic, but they're illiquid. But I'm probably sitting on like a paper gain of maybe 3 or 4 times return currently, and one of those could be like a 30 or 40 times return in the long run.
Well, so
Yeah.
I don't
So
think you still you answered that maybe totally noob question is, how does one discover, right?
okay, like if you're coming in the UK, if you're coming in with even very small amounts of money, I would say go check out some of the crowdfunding investment sites that support something called. There's a really good tax incentive in the UK called the Enterprise Investment Scheme, EIS, or SEIS, Seed EIS. So go check out Seedrs, SEEDRS. Go check out Angel's Den. There used to be one called Crowdcube. I think they've been acquired. But those would be good places to start. Like Angel's Den is a pretty decent place to start. Every quarter they have like a bunch of investment opportunities, and actually you can get started with as little as like £100, $100. Like you can get in for a small amount of money. And it's an interesting way to understand the space. But like, do your own due diligence. You're 90+% of the time you're going to lose your investment.
Right. Yeah.
Yeah.
Okay. We've got time for one more.
Yeah.
I'll keep this one simple, or maybe not. As soon as I said that, you know, Badger, you might think I have a lot of problems. That your poor humble monkey friend has all sorts of issues, but the main issue I have is that I'm often right. And the problem with being right most of the time is that the people you talk to are wrong by definition. And then that's how arguments start, right?
Okay.
But my resolution this year is is to avoid conflict and argue less, even when I'm right, by saying one simple phrase, by reminding myself of one simple phrase, which is that so? And this is a classic Zen teaching. So be forewarned, Badger. In future harangues from you, you're gonna all you're gonna hear back from me is that so, Badger?
Okay. All right. I shall bear that in mind. I will. I will highlight because I'm not in like punching range of you. If I get too many is that so's, but the new Mrs. Pikarski is, and if you is that so her a little too often, I think she'll get wise to it, and at best your
Yeah, she
conjugal
is.
rights
Right,
might be
that's right.
suspended.
Is that so, honey?
Get that get that duvet going on the sofa.
Right. Is right. I'll be sleeping on right. Yes. Enough. Yes.
Good. That's good. That's
Right.
great.
That's right. Your mileage may vary. Is basically what Badger is saying.
Yeah,
But it's worth experimenting with.
yeah. And you know, as we're growing our own Twitter feeds, like it's easy to go down a rabbit hole and start arguing with strangers over complete nonsense. Like you do just have to tune this stuff out. So yeah, like if you want to tweet us and you want to tweet us complete garbage, go for it. It is quite entertaining. Probably not going to block or mute you. I do find this stuff entertaining, but and if you want to send me complete garbage, but please no naked photos, I'm at 7 Luke Hallard. If you want to send garbage to Christoph,
I'm at 7 flying platypus.
yeah, but try not to argue with strangers on the internet. It's ultimately futile. You're just getting "is that so" from Christoph.
Yeah. Words to the wise. So that seems to wrap up our first episode of 2024. We did predictions episode before this year. This episode was all about the ways we're going to be resolved to be better investors. And with that, we bid you adieu. We're on YouTube and all the major podcast platforms. Subscribe now for a financial podcast that's as fun as it is insightful.
You can also find us at wallstreetwildlife.com, a starting point for those that know there's an intelligent and principled way to become wealthy, but haven't yet found a good jungle guide.
Luke and I are also both lead advisors at 7investing.com. If you subscribe with the coupon code WILDLIFE, you'll get a handsome discount off any annual membership.
And I think we just gave you our Twitter profiles. Yeah, we'll be posting regular portfolio updates, and I'm sure Christoph is dying to share the latest King of the Jungle graph on X. So go check it out there.
Are you ready to become a beast of an investor? Your journey starts here.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.